Welcome to the recorded workshop session for the Accounting Distance module.
All right, welcome back. So now what I would like us to do is to move to the next section. And then we call this section, we're dealing with the debtors ledger. All right, we're going to deal with the debtors ledger and debtors list. Okay, so let's look at, so we're talking about debtors ledger. So firstly, let's understand what these two words actually mean. So I'm sure by now this one is familiar. All right, so debtor is the customers to which we're selling on credit. All right, so these are customers to which we sell on credit. All right, so whenever we sell on credit to our customers, we actually call them debtors. Okay, so let's just see if we can. Okay, here we go. We call them debtors, and ledger, a new word. So it's a new word. So a ledger account. All right, so in accounting, we have a ledger. So a ledger is where we open accounts. So that's where accounts are opened. So I'm going to show you examples. All right, so what it means is here we have our customers. So we are actually opening accounts for these customers in the ledger. All right, let's say we have customer A and customer B and customer C. So what we mean is when we talk about debtors ledger, we are going to open an account for customer A, meaning that all transactions involving customer A will be entered into his account. All right, and all transactions involving customer B will be entered into his account. Remember, there are so many things that can happen with one customer. For instance, we can sell to this customer on credit, so we record that. And this customer, the same customer, returns the goods. So we have to put it in his account. The same customer can now pay to settle his account. We have to record it in his account. We can give this customer a settlement discount. So we have to record it in this customer. All right, so we're going to do the same thing for customer B, customer C. The whole point of that is so that if customer A calls us to find out how much he is owing us, we can be able to provide the answer on the spot. So what we are basically doing is that all the transactions involving customer A are consolidated into one account, and then we can be able to tell him exactly how much he is owing us. All right, we do the same thing for customer B and for customer C. All right, firstly, let's go and remember what a debtor's account really entails. So in accounting, we have T accounts. So let's go back to the principles. Okay, so we remember the foundation of accounting. So we always go back to this. So this, I call it the foundation of accounting. So if you get a hang of this, you should be okay. So we dealt with this in the first workshop. So I'm just refreshing your memory so that it will make it easier for you to understand what we're going to do now. So we've got expenses, and then we've got income, and then we got drawings, and then we got capital. So you remember that we call... Oh, I'm sorry. sorry. Okay, sorry. Okay, so you remember that we got all these accounts, and the left side we call debit, and the credit side, the right-hand side is called credit side. So we will have a debit side, credit side. So you remember this from the first workshop, but I'm just using this to remind you of the principles. Okay, so you've got debit, credit, debit, credit. Okay, so we remember from our foundational principles that our assets increase on the debit and they decrease on the credit. Liabilities increase on the credit and they decrease on the debit. Income increases on the credit, it decreases on the debit. Expenses increase on the debit, they decrease on the credit. Drawings increase on the debit, it decreases on the credit, and capital increases on the credit, it decreases on the debit. And the reason I like putting them in this sequence is that these are following the same pattern, and then these three are following the same pattern. All right. So remember, this actually is in line with our magic formula. Asset equals to equity plus liabilities. So you've got assets, you've got liabilities, and all these four are elements of equity. All right, so basically we are talking about these accounts that we have on the accounting equation. All right, the reason I'm bringing this to mind is because when we do a ledger, we are actually preparing an account for a debtor. We must first understand whether a debtor is an asset, liability, or equity. So we have to be clear about it because it's going to make sense. It's going to make it so easy for us to work with. All right, so a debtor, remember, we said it's an asset. All right, so a debtor is an asset, and then we said a debtor. So remember, we said a debtor, it's an asset. And then what type of asset is the debtor? We said the debtor is a current asset. Okay, so you can remember that. All right. So remember, we defined asset as what the business uses to generate cash. All right. So assets transform into future cash. So when we have a debtor, we have an asset because when they settle the account, the business is going to receive cash. But we say it's a current asset because it is payable within a period of less than 12 months. So if you have a customer, you don't wait for the whole year for them to settle their accounts with you. You'll usually give them 30 days or 60 days, but usually not more than that. So that's why we say it's current, because it will be settled within a period of less than 12 months. So, but the key thing for the purposes of what we are doing is to remember that a debtor is an asset. And then this is an asset. So which means if a debtor increases, it must increase on the debit. If a debtor decreases, it must decrease on the credit. All right, so let's have an account for a debtor, and let's have a picture and some understanding as to how it increases and how it decreases. All right, so let's just put this in perspective. Let's say we have our debtor here. So we remember that a debtor is an asset. So we'll have a debit and the credit side, this side. So this is a debtor. So if we say a debtor is an asset, we have agreed from the principles that the debtor is going to increase the asset. As an asset, it's going to increase. All right, so it's giving us a bit of a problem, but you can see it. This is an asset. We're saying an asset is increasing on the debit and it decreases on the credit. So a debtor as an asset is going to increase on the debit and it's going to decrease on the credit. So now let's think about it. If a debtor is increasing, what will increase the debtor? All right. When we sell goods on credit to a debtor, the debt they are owing us is going to increase, isn't it? All right. So what will increase the debtor? One is credit sales. If we sell to them on credit, then the balance they are owing us is going to increase. So what else can actually increase the debtor? Oh, think about it. So if the debtor's account has been outstanding, what do? We charge them interest. So if we charge them interest, then their debt they are owing to us is going to actually increase. So it can be increased by the interest. Okay, interesting. But then what can reduce the debtor? All right, so if we sold to this customer on credit and they return the goods to us, then that must actually reduce the customer's debt. So we say when it reduces on credit. So when it reduces, it will be through goods returned. All right, interesting. So it makes sense. They're owing us and then they return the goods, so their balance must actually decrease. How else? If they are paying, they're settling the account, their balance must actually decrease. Okay, so when they pay their accounts, all right, then the account will decrease. All right, so we say the debtor as an asset will increase on the debit and it will decrease on the credit. So when you understand it, when you understand that, it makes it easy for you, because whenever you make credit sales, then you are going to record the transaction on the debit side of the debtor's account. If they are charging you interest, you're going to put it on the debit side. If goods are returned, on the credit side, because you want to reduce the account of a debtor. All right, so then what we are going to do is, okay, prepare the debtor's ledger. So what we are going to do is we're going to open an account for customer A, customer B, and customer C. So the principles that I've just highlighted to you relating to this account are going to be absolutely applicable to these accounts when we prepare the debtor's ledger. All right, so let's go to a question to illustrate that. So here's the question. So the question is saying, prepare the debtor's ledger for new lens traders and then you prepare a debtors list. All right, so you'll see the debtors list is actually derived from the debtors ledger. So we have to do the debtors ledger first. All right, so remember we are saying when we do the debtors ledger, we are preparing the accounts for our customers, each and every customer that we have. So what we need to do is to go up and see who those customers are. What are our customers? Who are our customers? All right, so what I'm going to do is I'm going to illustrate using two customers, because if I just do two customers, you'll be able to do the rest. And remember, if there is anything that confuses you, you are always at liberty to contact me. I'll always be there for you. All right, you're not alone. Okay, so these are our customers. So our first customer is A Milan and D London. Okay, so we are going to do, I'm going to take you through A Milan and A D London, and then you can do York and Sydney. Okay, so these are the balances at the end of March. All right, these are the balances at the end of March. So whenever you deal with a debtors account, you always start with the balance. So that is the first thing you start with before you can go and look at other things. You always start with the account. So when we open the account from A Milan, we're going to start with this balance. So what it means is that at this stage where we are, Milan is owing us 14,860.86. That's what we're going to start with. All right. And then because we are recording transactions relating, all transactions relating to Milan, we must go and look at our books and see where Milan is featured. Okay, so let's go to our books. Okay, there is our friend. Can you see from debtors journal? So it means we sold goods on credit. You remember what debtors journal says? That's when we're selling goods on credit. So we sold to Milan on credit, and the amount of the transaction was actually 18,163.27. In total, he is owing that as debt. So remember, the total is always equal to sales plus the VAT output. Okay, so we know that we sold to him on credit. Okay, so let's go and see where else we can see Milan. Debtors allowances. Okay, so he did return some goods to us. All right, remember debtors allowances? That's when the customer is returning goods to us. Okay, that's good. So we can see it's all good. Okay, let's just say. Okay, so this is a general let's see which one is this. Oh, it's cash book receipts journal. All right, let's see if we can just turn it around. Lovely. Okay, lovely. All right, so let's see. Okay, so cash receipts. So it means here we received money. This is where we're receiving money from our customers. Do we have Milan? Of course we have Milan. So you see, Milan did make some payment. Interesting. All right, let's go. All right, let's go. So this is a general journal. Let's see if we can see some Milan here. Okay, so we can see Milan. So Milan was given some discount. Okay, very good. Okay, so there's no Milan, so we only have. Oh, yes, absolutely. Okay, so here we see that there was some reversal of a discount which was allowed to Milan. So it means that there was some funnies with me, Mr. Milan. We will get to know about that because we see he was given a discount and this discount was reversed. Okay, so let's just see. So this explains to us why there's some funnies with Milan. Okay, let's just turn it around. Is it? Let's see. Oh, there you go. Clockwise. Do it again. Okay, so let me go down and see if. Okay, here we go. Go down. Go down. Go down. Go down. Go down. Oh, it's fine. Good. Thank you. All right, so we can see why there was some funnies with Milan. Because what happened here is Milan paid, but his check was actually returned by the bank. Okay, the sign RD basically means returned to drawer. That's what it means. So usually what happens is if someone issues a check, because when the person issues a check, it means that they are paying, they want to pay. They want their bank to transfer money from their account and pay whosoever they want to pay. So, but the bank will always check if you have money first before they can transfer money. So it will seem that Mr. Milan gave us a check, and when we went to the bank just said, no, Mr. Milan doesn't have money. So it means that whatever money was reduced, all right, when Milan made payment, whatever amount we reduced his account by when he made the payment must be reversed, because it's as if he did not pay. All right, so it's good. So this is all good. So let us prepare an account for Milan. So what we are saying, when we do a debtors ledger and we are doing an account for Milan, we are going to post only transactions relating to Milan. We are not going to mix him with all the customers. We focus on him. So let's do that. All right, thank you. All right, so this is what we're going to do. So we go down and then we going down. Okay, so this is how we prepare an account for Milan. So we're going to have a Milan. Okay, so when we do the account for Milan, we're going to have a couple of columns. We're going to have date. We're going to have details. We're going to have debit. Oh, remember that debit, that increases the asset. Then we have credit. So that's the relevance of those debits and credits and balance. All right. So I said to you that whenever you are starting with an account, we first start with how much the person was owing us. All right. So they've given us the balance on the 31st of March. Okay. So let us see how much he was owing us. All right, let's just see how much he was owing us. There we go. All right, so he was owing us 14,860.86. Okay, so we're gonna go and say the balance is it 4860.86. Okay, so and then they say the period, so let's just write the date fully. So we're going to have 31st March 08. Okay, so you're going to have 31st. Okay, let's just do it nicely. 31st March 08. Okay, so under details we just write balance. So we actually just described what happened. So this was the balance. So that's how much Mr. Milan owed us. All right, so we must go and see the first transaction that involved Milan.
It was 14.
Or 14,860. Okay, so let's just get it right. Okay, so it's 1,4. Okay, so that's balance. Okay. Okay, so it's balance of 14,860. So let's go to the first transaction which involved Milan. Okay, there we go. All right, so that's why the lesson I gave to you initially is very important. All right, because you see the debtors journal. So the debtors journal is saying something to you. Remember, we said in the debtors journal we record credit sales to the customer. All right, now let's take Mr. Milan's situation. All right, so if we are selling to him on credit, will his balance increase or decrease? So if we are selling to him on credit, will the amount he owes us increase or decrease? So it will increase. So we know. So then we're going to come here and say on the 1st of April, it's fine. So on the 1st of April, 08, all right, we sold to him. So we're going to have credit sales, all right. It's always a good idea to put the invoice number so that it will appear on our statement, all right. INV 650, okay. So you'll say INV 650. All right, so we say if we are selling to him on credit, the debt that he owes us will actually increase. All right, so we say, okay, on which side are we going to put it? Are we going to put it on the debit or the credit? So it's going to be on the debit because we said the asset increases on the debit. All right, so let's go take the amount. So it's 18,163.27. So because remember we are dealing with a debtor, so we only take amounts from the debtors control column. All right, so it's going to be 18,163.27. So you're going to go and say 18,163.27. So which means we must now increase the balance. So we must always update our balance. So what we're going to do, we go to our beautiful, lovely, and cooperative calculator here. And we say, because we are increasing his balance, we're going to say 14,860.86 plus 18,163.27, and let's say equals to. So it means now his updated balance is 33, right? 33,024.13. 024.13. So we are done. So we go to the next transaction affecting him. So the next one, debtors allowances. So you see here we say it's when the customers are returning their goods. So you can already see that if Mr. Milan returned the goods, then what's going to happen is his balance is going to reduce, isn't it? All right. So we must reduce it. So we must, let's see how much. Okay. So he returned goods that were worth 3087.76. Okay. So we must remember to take the credit note number. So let's just check the date. So the date was the 5th. So we're going to go to the date there and say the 5th. So you're going to say the 5th. Okay, so let's say the 5th. It's the 5th April. 08. All right. So you're going to say returns. So when we do the returns, we're going to put the credit note number. So let's go and look at the credit note number. Okay, CNT 374. Okay, CNT 3, is it 94? 74. Okay, so we're going to label them as sales returns. All right, because here the debtor has returned the goods. All right, so now because we are dealing with a debtor, it's an asset, it increases on the debit and it decreases on the credit. So when he returns the goods, we must actually put the amount on the credit. So let's go and see the amount there. It's 3087.76. Okay, 3087.76. Okay, so you see now we are reducing his account because he returned the goods. So we have to update our balance. So which means now we are reducing our balance. We go to our lovely calculator here and then we work out the calculation. Okay, so we're going to say 3087.7. Okay, let's start with a balance. Sorry. So 32024.13. Okay, so let's go back. So you're gonna say 33024.13 minus 3087.76. Okay, so that's equal to, okay, so it's 29936.37, 29936.37. Okay, so 0.37. All right, so that's the updated account. So it was this and we reduced it by, so we go to the next transaction. Okay, so let's go and see what happened next. All right, let's come here. Okay, so interesting. Right, let's just get rid of this so that it doesn't confuse us. Okay, so A Milan is actually now paying. He's settling his account. All right. So if he settles his account, he's paying off his account, his debt is going to reduce, isn't it? So it's going to reduce. All right. So let's just double check the date first. Okay, so the date is the 10th. Okay, so the date is the 10th. Let's go put it. So you're going to say 10th April. Okay, so he's actually paying. So when he's paying, we usually use bank because he's paying cash. So let's just see how much so receipt, okay, receipt number is RC426. So let's put it. So we have RC426. Okay, so let's just see how much the amount is going to be. So 28140.19. Okay, 28014.19. Okay, so we obviously put it on credit because it's going to reduce. 2814140. Okay, so 28140. Okay, so it's 28140.19. Okay, so then it means we must reduce the balance again, okay, and update it. Okay, so we are going to our lovely calculator and do our calculation. So we're going to say, remember this is our balance, so it's here, so we can just continue and say minus 28140. Right, let's just put it correctly. 28140 point. Okay, so it doesn't want me to be holding the pen when I do that. So it's 29936.37. Okay, minus 28140. Okay, so there's something here. So let's delete this. So it's gonna allow us, I hope now. Yes. Okay. Then we have our updated balance of 0796.18. So 07, we say our updated balance will be 11796.18. Okay, so that's our new balance. So we move to the next one. So see Milan. Okay, so you can see what this is actually saying. It's actually saying, okay, that balance was actually given to him as a settlement discount. All right, so let's go there and record this one. So it's JV330. So the date is the same. So you're going to say on the 4th, 08. So you're going to say settlement discount. Granted. Okay, so if they give him a settlement discount, it must reduce his account, isn't it? All right, so we have 1796.18, and you see at this stage he's owing us nothing. Okay, so and then this one we say it's JV330, so we must just put it. It's always a point of reference, so it's very important. We can't leave it. So JV330. Okay, let's go and see if there's something relating to Milan. So we said something, there was something at the end there, on the 30th. All right, so you see what happened, and this actually explains it. When he was doing that payment and he got a settlement discount, that check bounced. All right, it came back from the bank. So here, the business was actually reversing the discount, because if he was making the payment and he got a settlement discount on the basis of that payment, and the check is returned by the bank, it's as if he did not pay anything. So the discount that we have given him must be reversed, and even the payment he had made must be reversed. All right, so let's just go and put it. All right, so look what actually happened. So this was the payment he made with the related discount. So now, because his check has been returned by the bank, it's as if he did not make the payment. So we must cancel the payment he made. So in accounting, when something was on the credit side, if you want to cancel it, you must put it on the debit. So if someone was on the credit side and you want to cancel it, you put it on the debit. If it was on the debit and you want to cancel it, you put it on the credit. So what we're going to do is we're going to say on the 30th, April the 8th. Okay, we will say bank. All right, so, and then we will label it as 28,114.9. Okay, so which means his balance now increases to 28,140.19. All right, and then if you go to that last transaction in the journal here, you can see that they also reversed his discount, so we must also do the same. All right, so we must reverse his discount as well, because his check bounced. We have to reverse the discount. Let's just check the journal reference here. Okay, so it's JV 335. So here we'll say reversal of discount. So you're going to say JV 335. So how much was the discount? We must reverse it by putting it on the debit. Okay, so now we must add this to that, okay, because it will increase the balance. So we just add, because we have this balance already. So we just say plus 28,140.19. So what we got? 299. So we actually going to have this balance here. Okay, so let's put it down. So 2, all right. So you're gonna have 2,9936.37. So that's exactly how statement of A Milan will look like for the month. So when we actually print out the statements, this is what we're gonna have. Statement, it will be A Milan and all his transactions, so that Mr. Milan himself can go through his statement and see whether the balance he has is actually correct or not. All right, so what the debtors ledger really helps us is that at the end of the day, we can print out the statements for our customers showing all their transactions for the month. All right, so let's go to the next one.
I just asked a question.
Yeah.
So,
okay.
Here it uses the input VAT as a separate item to get to that 179. And
Yeah.
so it uses this input VAT. Why is it separated here?
Okay, so
we didn't separate it here.
All right. So the reason why we don't separate, it's because when you are buying goods, say you're buying clothes from Edgar's on credit yourself, they will give you an invoice showing that the clothes, the selling price of clothes without VAT is 1,000, and they will say plus VAT 140, and the invoice will say 1140. So as a debtor, how much money will Edgar's expect you to pay?
1140.
Oh, you see, 1140. And can you see that this amount actually includes VAT? All right, so what's going to happen is, this is the total that you are owing Edgar's, so you pay the full amount. So when Edgar's receives that money, Edgar's will keep this in their own pocket, and they will take this to the taxman. But as far as you are concerned as a debtor, you have to pay the full amount. All right, you see that?
Yes.
Okay, so that's how it works. So let's look at the second one. So I like this one because it's much more comprehensive. It's got a lot of things. So it can actually help, it can help you to see how it works in practice. So let's go to the balance of the second.
Can I ask one more question?
Okay.
Will he be charged interest because he paid and then it was reversed?
Yes, so what it means is that next month he will be charged interest. And sometimes they even charge you penalties if your check is returned. Okay, so we need to go down. Yeah, down. We need to go down. Yeah, here. Okay, so now we dealt with, Milan, so we can now do D London pretty quick. All right, let's do D London pretty quick. Always we start with a balance. So you're going to say D London. Okay, so we've got the date, details, debit, okay, credit, and balance. All right, so we always start with a balance. So on the 31st March, okay, so my marker is full of life. Okay, so 08, so we've got balance. So let's get the balance. Okay, it's 17,337.67. Okay, so let's go to it. 17,337.67. And then once we put down the balance, we go to the transactions involving D London. Okay, so let's say it's the second one. So invoice 651 on the 6th. Okay, so let's go put it. So on the 6th of April, 08, so these were credit sales. Okay, so invoice 651. Okay, so let's see the amount. 36,326.54. All right. So it's 36,326.54. 36,326.54. So because we sold to him on credit, his balance is going to increase. So we go to our calculator and say, okay, okay, so let's cancel that. Okay, let's delete that. So we can cancel. So we can say 17,337.67, okay, plus 36,326.54, okay, equals to, so that's his new balance, 53664.21. Okay, so now we move to the next one and see where he features. Okay, so you see there, he returned something to us on the 10th. Okay, so we have the credit note there, credit note number 395. So let's go put it. So on the 10th, okay, so these were sales returns. So credit note, what was the credit note number? Okay, so CNT 395. So how much was the amount? Okay, it's 6538.78. Okay, 6538.78. 6538.78. Okay, so then we can go to the calculator. So let me double check the amount, 653, so it's fine. So we can just go and calculate it. So we'll say, okay, 53664, okay, 0.21 minus 6538.78 equals to, so it's fine. I said minus, so it's 47125, 7125.23. Okay, so then we can go to the next one. Okay, so let's go and see what happens. So London, then he pays on the 22nd. So it's RC 427. So let's go to the 22nd. Okay, so 22nd April. So it's RC, what number? So 427. So he's actually doing a payment. Okay, so how much is the payment? So it's 3632.65. Okay. 3632.25. 65. Okay, so now we can do a calculation to update the account. So because he's paying, remember, then it reduces his account on the credit. So we will say 47125.23 minus 3632.65, then equals to, then it's 43492, 43492.
No.
Oh. Okay, 43492, I suppose. Yeah. 43492.28. Is it 0.28? Oh, 58. Oh, you're right. So it's 58. Okay. 492 5 58. Okay, so I hope you can see that it's 58. Okay, it looks 2.58. Okay, so let's go to the next thing. All right, let's see look at London. Okay, so let's see what has happened here. Okay, so transaction involving London. Okay, so here, if you look at this, they have a creditors control and debtors control. And you look at this and you're like, this is so interesting. So what this means basically is that D London is our customer as well as our supplier. All right, so it means D London is buying goods from us on credit, so we sell to D London on credit, but also D London supplies goods to us on credit. All right, so it does make sense then when we prepare the account of D London, if D London is owing us money, it then makes sense to reduce the amount he's owing us by what we are owing him. Isn't that interesting? All right, think about it. So you have this D London. Let's just put a simple example. So you've got this D London. All right. So D London is a debtor. He's owing you 2,000, but he's also your supplier. All right. So you've got, on the other hand, you've got D London as your supplier. So if you buy from him on credit, he becomes your creditor. So what it means is, let's just say he's your supplier, and then you owe D London 500. So now you want to prepare an account for in the debtors ledger of D London. So you're going to say, all right, Mr. London, you are owing me 2,000. But because I owe you 5,000, I am going to reduce your balance by 500 so that I can actually just say you are owing me 1.5. Doesn't that make sense? It does make sense, because otherwise we're going to have a situation whereby London is sending us statement, and then we have to pay him 500, and then we are selling him statement, and then he's got to pay us 2,000. But really the net effect is, if he is owing us 2,000 and we are owing him 500, rather he just pays us 1.5. All right, so that's how that's what this entry actually means. All right, but this actually also leads you in a way, if you are looking at this, because remember, the account you are preparing is the account of D London, who is the debtor. All right, the good thing about the general journal is that it's got a debit, it's got a credit, which is in line with our debtors ledger, which has got a debit and a credit. So all that you have to do is, okay, I am doing the debtors control, all right, which is the account of D London. So I just have to check in the journal where it sits. All right, you see it is sitting on the credit. So what you do is then you go to your debtors ledger and put it where it is sitting on the general journal. So it is sitting on the credit, and then you're going to go to the debtors ledger. So you're going to say 43492.78. So 43492 Is it 0.58? 78, yeah, okay, so that's 78. So let's go and put it there. 43492.78. Okay, so we're gonna have to put, what was the date? Let's just check the date. Okay, so the date was 22nd. Okay, so you're gonna say 22nd on the 4th. Okay, transfer of credit balance. I'll just say CR just to shorten it. Okay, so then what we do is we take this and we minus that. As you can see here, we're going to have minus with 20 cents. So now this is a negative 1. So it means now we are effectively owing D London 20 cents. All right. So what it means is that he was owing us this, we were owing him this. So we just set off the two amounts. So we are owing him actually 20 cents.
Do you have to put the journal
Oh, yeah.
JV331.
Okay, so you're going to say JV331. So let's go and see if there is anything involving London. So everything involving, let's go down. Okay, so everything involving London has been sorted out. So we know the balances. So let's go. Let's go up. Let's go back to the question. Okay, so you see, by doing those two accounts, we're answering question number 1, the debtors ledger. So because in the debtors ledger, we are opening the accounts of the individual customers. All right, so you must know that this answer we are providing is not the full answer. You will need to go and open the accounts of the remaining customers yourself. All right, and remember, if there's anything you don't understand, you can let me know. So I want us to go, because now we have opened the accounts of 2 customers, we prepare the debtors list. So debtors list basically is the balances that the customers are owing us at the end of the month. So what we're going to do, it's very easy. So what we're going to do, we're going to say, okay, how much is Milan owing us? Let's see. So let's go down. So Milan is owing us that 29936.37. Let's go down. So London is owing us we owing him 20 cents. All right. So now we want to prepare a list. Okay. So is there, usually should open a new document if you do this, but we can always all right, let's see if we can we can open a new one. All right, so if we prepare debtors list, all we're going to do is we're going to say debtors list. A Milan. How much is A Milan owing us? Then we come here and we come here. And then we look at A Milan. So it's 29936.37. So because the balance is right at the bottom. So it looks like it's cutting us. Okay, so but we know that our balance was 29936.37. So you'll say 29936.37, and then we know that D London, we were owing D London minus 20 cents. So basically then we add this all together, and then this is our debtors list. So basically this one is just a summary. So if as a business we want to have an idea as to how much all our debtors are owing us, we will be able to get it from this figure. All right, so remember it's not complete, because once you have done the accounts for other debtors, they will be included on the list as well. And then you can have the total for all the debtors. All right, so at all times, your total here must actually be equal to the balances that you've got in the debtors ledger. All right, because you are transferring exactly the same amounts. All right, so we're going to take a 5-minute break, and then we will move to the next sessions. I hope this has made sense to you. You should be able